And do you think we are getting near some sort of a solution there?
I think we're in a better place to deal with Greece and the potential implications of Greece leaving or another bailout than we were a few years ago, back in 2010, when markets were a little bit more uncertain and there was a lot more fear of contagion and the risk of contagion as well. But all over, I think if you have a look at financial markets, there are times when it's very easy to make money. You could use a dartboard, and then there are times where it's very difficult to make money. And I think we're at one of those times where it's very difficult to see what the end game is going to be. Markets always look forward, and if we try and have a look at what the markets are going to look like in 6 to 12 months' time, it's very difficult to see what's going to happen there. We know that a lot of the trading in terms of China is locked up for 6 months, and that's going to unwind in 6 months' time. So although we're seeing stability at the moment, there's still a question mark over Chinese growth, about the Chinese market. So I think investors on one hand are nervous about that, and it has been the defensive areas that has been performing the best so far in the new financial year. We've been 2 weeks into the new financial year, and it has been sectors like the healthcare space, the high yielding space, which have been the better performers. And the two sectors which have lost ground is a trend that we've become very familiar with, and that's the energy and the material space, which has continued to lose ground. So I think those concerns around global growth, around China's impact on global growth, will continue for a number of months, and that's what the market's nervous about. But once we start to see a bit more momentum, positive momentum coming through in China, especially in terms of business confidence, consumer confidence, then we will start to see a bit more confidence flowing in through the Australian market.
Do you think that is